Q4 is almost here, and if history has taught us anything, it's the final stretch of the year can be absolutely explosive for crypto. I know the price action has not been very encouraging this week, don't get me wrong, I understand. But it's not just because of the 4-year cycle that we're talking about this. Now that we have the Fed cutting interest rates for the first time this year, gold leading the rally, following global M2 almost exactly to just around $3,800 an ounce. Tech stocks are rallying after some massive AI announcements from NVIDIA, Oracle, OpenAI, pushing the Dow Jones, the S&P 500, and the NASDAQ to do all-time highs in the last week. There's been a tiny correction in stock markets, but nothing to really bat an eye at this point. JP Morgan is now predicting the stock market could rise another 50% if allocations reach dot-com bubble levels. Not like overnight or by the end of the year, but in the next couple years, right? But then there's Bitcoin. Still moving sideways. The fear and greed index is back at fear as if the price is already topped out and the new bear market's about to begin. But this is exactly where the fun begins. Let's break down why Q4 could be explosive for Bitcoin, crypto, and the wider financial markets. But forget Bitcoin for just a second, because the action right now, of course, is happening in the stock market. And it's setting the crypto market up for its next rally. Right now, risk appetite is very high in the stock market. That's exactly why JP Morgan is predicting the S&P 500 could rise another 50% in the coming years. That's wild, man. It's crazy, crazy numbers, JP Morgan. It's bait. They're setting us up the exit liquidity, aren't they? I see you, JP Morgan. Anyway, Goldman Sachs also raised its year-end target from 6,600 to 6,800, citing a dovish stance from the Fed and strong corporate earnings. By the way, we're expecting 2 more rate cuts this year. Goldman even boosted their 6 and 12-month return forecast to 5 and 8% respectively, implying target levels of 7,000 and 7,200. Speculation is already bubbling within the U.S. stock market, and the tech stocks are the indicator. ARK, man, first the SPX ratio just hit the highest level since July. This simply means that ARK Invest's high-risk, high-growth tech fund, ARKK, is outperforming the S&P 500 right now. Kathy Woods is making money again, man. It's crazy times. Investors piling into high-beta speculative growth plays. It highlights just how quick risky investors will flood their money back into the market and just how much risk investors are taking right now. Liquidity is flooding in, tech stocks are running hot, and investors are chasing growth like there's no tomorrow. And it's this kind of sentiment that usually spills over into the cryptocurrency market. Bitcoin is quietly watched from the sidelines. In fact, stock market's been relatively calm in the last week. Crypto market's been kicked in the balls. But this is exactly the kind of setup where if crypto catches the next tailwind, the markets will pump super hard and super fast. Catching these sidelined, off-guard people will then get them into FOMO to come back into the market and push prices back higher. Now let's talk about the real game changer here, of course, the Federal Reserve. Before we get into that, guys, if you're trading these crypto markets and you need yourselves an account over on BitUnix, you have to ask yourself the question, will you start taking your trading seriously and go to an exchange that respects your privacy and also has insane bonuses for you? Yes. Okay, so here's the deal. No KYC, no VPN, no BS. Anyone, anywhere can use it. That's you. You'll get crazy bonuses, 30% off your trading fees, $400 deposit bonus, $400 cash money back. That's nuts. There's a link down below where you can get this offer. Deposit $2,000 or more. You get that $400 back. There's crazy trading bonuses. The more you trade, the more money they put back in your account. And for the rest of our live streams in the month of September, we're giving away $1,000 per live stream. If you want to be eligible to win that $1,000, you got to be signed up. Link down below. Go check it out. Thank you very much. Okay, the Fed. Look, this isn't just a market sentiment thing. It's macro policy and it's massive. Well, the headlines are starting to scream that a U.S. recession is imminent because of the slowdown in the jobs market. The reality is the U.S. economy isn't slowing. It's likely reaccelerating into Q4 and into 2026. We're in a run-it-hot kind of environment, but the Fed has kept the housing market and the labor market tight with their overly excessive policies. The Fed is ignoring inflation risk and cutting rates now, though, into higher than normal inflation while the economy is still running strong. Weak payroll numbers in early September were the spark to make the Fed act. September 5th and September 6th were the turning point when the market decided, yep, the Fed is officially running it hot, and let's go. As long as markets stay above that low, the bull market is alive. It's basically our invalidation point. If we drop below it, the bull market is under threat. But if we hold, the sky's the limit, with liquidity flooding in while growth is strong. The result is a melt-up of everything, and it's likely to continue. Sound familiar? Well, it's almost identical to late 2024. I know we had the Trump trade happening then too, but a weak payroll print in early September did mark the exact bottom for risk assets. Investors panicked. The Fed jumped in with cuts and a massive rally followed. Now, here's the twist. Just days ago, Fed Chair Jerome Powell tried to spoil the party. He came out and said stock prices are fairly highly valued. Okay, Jerome, but here's the key. He didn't say markets are unstable. He didn't backtrack on cuts. In fact, Powell admitted financial stability risks aren't elevated. So they see the bubble forming, but they're still letting it run. The bubble has lots of room to inflate still, and that's why this setup is so unusual. Normally when valuations are extremely high, the Fed look to slam on the brakes a little bit. Instead, they're only now starting to ease. Okay, look how far we've come already with rates this high. What happens when they cut rates even more, when the economy runs even hotter? For Bitcoin and crypto, this is the rocket fuel for an end-of-year rally, and likely things will keep moving well into 2026. Now, let's bring crypto back into the picture here. Right now, the crypto fear and greed index is still in the fear territory. A lot of investors believe the top is already in. It's already over. Pack your bags, go home. See you next 4 years, right? But I don't agree with the bears, okay? When speculative stocks run, crypto tends to follow. When gold runs, crypto tends to follow, but with a lag. And we're seeing the classic signs that Q4 is setting up to be a strong end of the year. Long-term Bitcoin holders have taken profits in 3 waves during the cycle, each time selling into strength. The third wave seems to be coming to an end, which makes Q4 an exciting time because running out of sellers, which means as long as buyers continue, which has been the case, price likely to go up. And it just so happens we're in the part of the cycle where there are no new main characters. So old favorites are being brought back. You have CZ from Binance out here representing the Aster DEX, and that's gone super crazy. And somehow Sam Bankman-Fried sending a GM casually from prison. This guy. Anyway, you can't make this stuff up, guys. It's crazy. These little signs are exactly what experienced investors are looking for. The chaos is back. The opportunities will follow. So Bitcoin may be going sideways for now, but that's exactly the calm before the storm. We've had crazy launches too, whether it's Aster going up 10x or Avantis going up 10x or Stable going up 10x. The launch of Plasma, which is like a 300x return for pre-sale investors. Crazy things have been happening. With gold leading the rally and stocks already following, all that's left really is for a crypto breakout to come, pushing Bitcoin to new all-time highs and taking altcoins with it too. The Fed knows the bubble is inflating. They see the froth building in the market, and while they're letting markets run for now, you can't afford to get caught up in the hype, of course. Being in the bubble blindly is a recipe for getting burned when the music eventually stops. So that's why timing, positioning, and of course sticking to your plan are as important, as critical as ever. Of course, you want to ride the wave, but you can't afford to get swept away by the wave. So here's the potential play. Q4 has all the ingredients for a risk-on rally. Is it guaranteed it's going to happen? No. Markets are fickle, you know this, and sometimes just get kicked in the balls, despite your best intentions. You need to stay strategic. Okay, that means being patient, watching key support and resistance levels, managing your exposure by sizing your positions correctly, taking profits on the way up and selling into resistance. Likely, my opinion has been we get a major top in Q4, November, December, something like that, 3 months away. We get a major top, and that major top will be so big that it'll make everybody think it's over when the correction comes after that. But it won't be. It'll just be the pullback before the next big rally into 2026. If the macro is an indicator for us, which usually it is, then Q4 could be pretty crazy for markets, okay? Can it still be derailed? Yes. Who knows what the hell Trump's going to tweet tomorrow? War is always a threat. Something could explode. Who knows, okay? But rate cuts, stocks, gold, business cycle, everything is saying we are likely to go higher. Thanks for watching.